Thanks for joining us here on Market Call. I'm Morella Fernandez. We have a guest on today who is new. Reza Samahin joins us to give investment advice, and we will let you know how to reach us. Market Call toll free 1-855-326-6266. If you want to email your questions, you can do that as well. Market Call at BNNBloomberg.ca. Let's join Reza now and talk a little bit about what's been going on today. Reza, thanks for joining us and welcome to the show. You picked a good one. We have an election call that we're hearing about, so the Canadians could be voting soon. I'm wondering, with the uncertainty we've seen in the market, do you think the election call will actually affect the markets as well and add to the uncertainty?
Well, you know, we've had a lot of uncertainty. We've had a big drawdown in the U.S. in particular. And I don't see the Canadian election having that much bearing on the U.S., which is where I'm mostly focused on.
Okay, so you're focused mostly on the U.S. A big picture for a moment. I'm wondering what you think investors need to understand or accept about the current climate. Essentially,
the new administration is very unpredictable. There's just a lot of uncertainty. If you've seen the latest consumer data as well as business data, you do see it in the numbers that consumer confidence is waning. People are a little bit anxious, similar with business. Capital spending may be slowing down a little bit. Having said that, these are all short-term reactions, and it's really how long does this uncertainty last? So if the uncertainty lasts a long time, then it could feed back into the economy. If it doesn't, this is a really big buying opportunity.
Okay, so how are you advising your clients at this time? Are you kind of telling them to buckle down and expect it to be a longer ride?
Well, we don't try to predict the future. So the advice we give to individual clients is really based on their circumstance, and we really prepare them for different eventualities, but we don't try to predict the future. From a portfolio perspective, though, you could say that we are seeing some opportunity out there. Many of these names, for example, the Mag 7 are down somewhere between 15 and 20%. Some of the more growthier, smaller names are down almost 40%. So that does create opportunity.
How are they feeling about all this?
Our clients are, you know, it varies. I mean, some of them have seen it before, and you don't get deals in the market unless there is uncertainty. So this is a good thing in certain respects. In other respects, there's probably some anxiousness about the whole thing, but, you know, it varies by client.
For those who are nervous about a continued trade war and the continued volatility, are you changing up what they're investing in? Are you looking for safer areas to put their money in, safer sectors?
Well, I'm very focused on U.S. growth names, and my time frame is multi-year. So 3 to 5 years is my time frame. So I'm not going to basically go to all cash or pull out of the market just because there's some uncertainty. In fact, it does create buying opportunities. Having said that, I have raised a little bit of cash in anticipation of this uncertainty. So I'm looking to deploy that as these names pull back. But because my time frame is much longer, you know, I'm not trying to change what I do on a fundamental basis.
Got it. Okay, we are going to take a quick break so we can line up some phone calls. Reza Samahin is a partner and portfolio manager at KJ Harrison and Partners, taking your questions today on U.S. growth equities. Here again is how to reach us today. We're back in a moment. Welcome back to Market Call, and thanks for joining us today. We want to get straight to your questions, and Chris has emailed a question in for Reza today, so let's go to that. He says, can you please provide your insight on Palantir Technologies? Reza, what is your take on Palantir?
It's a fast-growing SaaS software name. It has a huge multiple. It's probably one of the most expensive names out there in the software universe. And the reason for that is because it's seen huge inroads with government and now industry, and it's in the fast-growing, business intelligence space. My issues with Palantir right now, besides valuation, is that about half its business is government. And if you look outside the U.S., you see that slowing just because of the moves the administration's been making. So, will Europe be as amenable, to be using Palantir in the future? That's a big question mark. And so I'm a bit cautious on the name, both for valuation reasons as well as that government business outside the U.S.
When you say that they are used or adopted primarily by government, is it the federal or national level governments that they tend to provide?
Well, it's about
for?
half and half. It's not fully government, but it's about half and half at this point. I think it's mostly used by intelligence agencies, the U.S. military, any type of use case that requires analysis of large amounts of data, also real-time data.
Okay, and so that's at the national level, and you think because of the layoffs and the efforts to cut the budget there, they could feel the effects of that?
That's one issue. The second issue, though, would be outside the U.S. So if you think about Europe, they're trying to repatriate a lot of defense spending. They've been highly reliant on the U.S. all these years, and that's changing. So that could affect Palantir.
Got it. Okay, let's go to another viewer email. This one's from Tony. Tony says, could I please get your guest outlook for Uber? Haven't talked about Uber in a while. They have grown a lot. How is Uber doing as a company?
He's correct in saying that Uber has grown quite a bit. They've also grown their cash flows, which is very encouraging. They've taken share from their closest competitor, which is Lyft. So they're doing quite well. Now, the stock, however, hasn't done much for the last several years. It's been volatile, but really over the span of several years, it hasn't really done that much. The big reason for this is that looming on the horizon is this thing called robotaxi or autonomous vehicles. Now, if that gains scale, right now it's very small. Like Waymo has commercial vehicles out there in certain Sunbelt cities like Phoenix and some California cities as well. It's growing rapidly, but it's still a tiny portion of the market. Now, if that gains traction, the competitive dynamics change. I know Uber's partnered with Waymo, but the competitive dynamics still change. It becomes more so a multiple supplier market rather than a dominant vendor like Uber that has both aggregates supply as well as aggregates demand. So now Uber just goes to a demand aggregation function rather than a supply aggregation function. And supply could be multiple vendors, whether it's Waymo or someone else, maybe Tesla in the future. In that case, Uber's market positioning is diminished somewhat, and that's what people are concerned about. So their multiple has come down, yet they're showing good fundamentals. So I would watch that space. Fundamentals are great. However, if robotaxi does take off in the future, then we have to re-examine what multiple we give to Uber.
Do you see that partnership they already have with Waymo perhaps growing? I mean, ideally, Uber has the setup that even if they lose the supply and providing the rides, they could definitely direct or foster the relationship the purchaser, the consumer, the passenger in this case, has with the robotaxi or the vehicle on the other side?
Yeah, initially I see it growing. I mean, Waymo has no real experience in dealing with such a large customer base, and Uber is really well suited for that. However, over time, if there are multiple providers of the service, and Tesla has said themselves they're not going to partner with Uber. So if you see the multiple robotaxi vendors, then that relationship, is under question. There's a big question mark around it because how much of the economics will go to Uber versus how much of it will go to Waymo? If Tesla says they'll take all the economics, does Waymo say, well, no, we're willing to give up a large chunk of it? I'm kind of doubtful about that. So it's still a wait and see thing, but I am a little bit concerned about that.
All right, let's go right to our phone calls. And Elliot's been holding on the line from Hamilton, Ontario. Elliot, what is your question today?
Good afternoon. With a somewhat rocky history, what is your assessment and outlook for Robinhood markets? Thank you.
All right. Robinhood started as very much of an activist and has moved on from that. How are they doing?
I think they're doing well. I think they have the brand. I think they have the millennials and the younger consumer or investor. I think they're highly volatile, obviously, because they're really tied to how well equities are doing. And you can see that in the stock price. They also have the crypto market opening up for them. So I think they're very well positioned. And there's not too many companies with that kind of brand power in that market. So, I like them. I think, unfortunately, it'll be just an incredibly volatile stock. But that brand power and the consumer segment they have is, it's a coveted segment. So I like them.
Absolutely. It's millennials who are growing and spending their money and are looking for a place to invest. Okay, let's go back to the phone lines. John's on the line from London. John, what's your question today?
Hello, Reza. Gold and copper have been running counter to the market in the last 3 or 4 months. We own Capstone Copper in Canada, Ivanhoe. They did well, and they're doing well again. Have you got a growthier name in the U.S. for copper, something that I may want to shift my assets into the greenback? Thanks very much.
All right, let's take a look at metals in the U.S.
Sure. I mean, I'm not going to suggest a smaller name in the U.S. just because, my thesis is more on technology and its derivatives, and copper is certainly a derivative of technology growth. So, for example, when EVs are growing, which they are, that should help copper demand. Electrification of everything is helping copper demand. Also, if the U.S. dollar weakens here, which is more than likely to in the long term, that helps commodities as well. So I'm bullish on copper. I can't give you a specific smaller, like a junior name or anything like that. But generally, the drivers are in place for copper outperformance.
All right, we are going to take a quick break. Back with the Reza Samahin, partner and portfolio manager at KJ Harrison and Partners. He's taking your questions today on U.S. growth equities. We're back in a moment. Welcome back. Thanks for joining us here on Market Call. We are going right to your questions. We have an email question from Chris in Ontario. He says, may I have your guest's opinion on Google's purchase of Wiz, and at current valuation of around 18.5 price per earnings, would you buy Google for a long-term hold? This is a bit of a pivot, I guess, for Google, but what do you think, Reza, of Google's acquisition?
Well, it seems like a two-part question, so let me answer the acquisition first and then talk about Google. I think it's a good acquisition. Wiz is a leader in security, cloud security, and there's synergies with Google. So Wiz uses a lot of CPU, a lot of processing power, which is Google's bailiwick. If they can move them to that platform, Wiz is on, I think they're on AWS currently. So moving them to GCP would definitely reduce costs for Wiz and also increase Google's cloud usage. That's good. On the negative side, there's some conflicts. If you're a customer, like if you're a CrowdStrike or a standalone customer that uses, that's cloud agnostic today, well, does Wiz now favor Google or is it still cloud agnostic? It's not clear where that's going. However, overall, I think there are more benefits than negatives, and it's a good acquisition for Google.
Okay, and
on the second question,
yep, go ahead. On hold and long term.
Yes. So the second question, it could be a very long answer, a very short answer, but essentially, Google, yes, it's well positioned. However, first of all, let me set some context here. Google invented the transformer. Like the transformer is the heart of language, generative AI models today, and Google invented it. Google invented a lot of the fundamental building blocks of AI. Yet, they trade at a market multiple or lower. They get no credit for all that technology they have internally. And the big reason for that is they're not good with creating commercial products. If you think of all the successful products outside of search, search obviously is their main product, but all their successful products are through acquisitions. That's YouTube, Android, Google Maps. All of those are acquisitions. Internally, they seem to be incapable of creating a hit product. And that's why the market is looking at them the way it does. It's wondering, can Google make that transition to a Gen AI future? And yes, it has the best technology, probably, arguably, out there. It does not have the best product. So if you look at query share, you see ChatGPT and others gaining query share against Google. And this is also especially with the younger cohort. Now, that hasn't affected Google's numbers. Their revenue's fine. all that's fine because the commercial searches are still done on Google. So if you use ChatGPT to, I don't know, find out about cars, for instance, like which car you should buy, well, you might switch to Google to find out the exact, dealership location or which website to go to for that brand. And as a result, Google still gets commercial searches, but they're missing out on that top of funnel that they used to enjoy. And I'm not sure what happens down the road.
I was going to ask you, I'm sorry to interrupt, but I was going to ask you, aren't they in jeopardy of losing then more of that traffic very quickly as people turn to these artificial intelligence chatbots to get their information instead of doing the Google search, instead of Googling it, they're going to AI.
So that's the risk, right? That's why the multiple is where it is at. But it's also the opportunity. They could turn this whole thing around if they really wanted to. But it takes good leadership, and I think probably takes a change in CEO. I mean, that's a bold statement to make. But if you look back 15 years, Microsoft was in the same position with different technology. Microsoft had missed the mobile revolution to Apple. It had the cloud SaaS revolution had not really started, or they were somewhere in the middle. They weren't really making that transition properly. And it really needed a new CEO. So we went from Ballmer to Nadella. And the stock at the time, if you look back 2010 to 2012, it was trading at 6 times earnings for Microsoft. It was a $17 stock. Today, it's a $400 stock.
So they might do better for some new energy coming from.
It needs a shakeup for sure. It needs a definite shakeup, and they have all the raw ingredients to make it a successful company. I mean, it is a successful company. To make it even a more successful company,
got it.
They just got to execute better.
All right, let's go back to the phone. Sal's been waiting on the line from Toronto. Hi, Sal.
Hi, thanks. As I was looking at some U.S. growth stocks, I've been seeing across the world a larger movement towards boycotting U.S., for example. I see that in the defense industry and other places where people are moving or switching suppliers. And so I was looking at businesses that have bigger exposure to the international market. And so MercadoLibre came up for me as one that seemed like it might be a good pick. So what I was wanting to know is, what do you think of MercadoLibre? And do you think that U.S. stocks are at risk of a larger boycott movement? Thank you.
So, Reza, are you familiar with MercadoLibre?
Yeah, so again, a two-part question. And yes, I own MercadoLibre. I love the company. I think it's really well run. It dominates in Latin America. They're branching out into payments and other things. The infrastructure is good. It's a really good, well-run company. It's somewhat susceptible to movements in the U.S. dollar, given how they purchase things in dollars and sell things like it. So there's some issues with that, but yes, I like MercadoLibre.
And do you see a lot of growth? Do you see a lot of growth for them, sort of overseas?
Not quite sure about that because there are big competitors in Asia. For instance, C-commerce. There's some companies out of Korea as well. So not quite sure how they can really penetrate those markets. Got it.
Okay, let's go back to the phone lines. Faisal's on the line from Toronto. Hi, Faisal. What's your question today?
Hi, good morning, guys. Marilla, hope all is well. Reza, welcome to the show. Could not agree with you more on your thoughts on Google. My question today is on Taiwan Semiconductor. Would you be a buyer at this price? It fell off from 225 to 175, and given the fact that they're going to be building their manufacturing facilities in the U.S. I'll hang up and listen. Thank you.
Yeah, they made a pretty big commitment to the U.S. with Donald Trump saying we want to bring, of course, the production back to the U.S. They were one of the first to make a very big commitment to the U.S. What do you think, Reza, of whether they will bounce back? Like many of those tech stocks, people are trying to figure out what lies ahead.
Well, I mean, Taiwan Semiconductor is the undisputed leader when it comes to leading edge foundries. I mean, what I mean by that is if you want to create an iPhone or an Nvidia GPU, like the latest versions, there really is no alternative. Those chips have to be made by Taiwan Semi. So from that perspective, they are the clear leader. Now, they've been the clear leader for the last several years. Has anything else changed? Well, they are also now branching out to the U.S. For various reasons, mostly the new administration as well as the old administration with the Infrastructure Act, CHIPS Act. So that's helped them. So they will diversify their geographic base. However, that may raise costs, but they have pricing power, right? So may not affect margins as much as you think. Having said all that, another reason they've done well is because their competitors have done poorly. So they only have really two major competitors. They have Samsung and they have Intel. And in China, they do have some new ones now, like SMIC. So Samsung at some point will probably get their act together. Not sure when. And then Intel, you might have been hearing about it in the news, but they too are getting their act together. So at some point down the road, and it may be a long road, but there will be some additional competition for them. I still think they will be the clear leader, and it's Taiwan Semi is a staple in most growth portfolios, I would think, at this point.
All right, Reza, we're going to take a quick break. When we come back, though, we're going to continue the conversation about American stocks. We'll look at the tech sector as well, talk a little bit more in depth about what could come back and happen there. We're back in a moment. We're back here on Market Call with Reza Samahin, who's a first-time guest joining us, portfolio manager from KJ Harrison Investors. And we're talking about American growth stocks, and we want to talk a little bit about some of the technology stocks, which we are picking up part of that conversation from before the break. Reza, I want to ask you about where you see the semiconductor growth, because we talked about Taiwan semiconductor, and I want to know where else you see some bounce back in that field.
Yeah, so if you look at semiconductors, there's a cyclical component and then there's a secular component. Secular has been dominated the last 3 years by generative AI. We all know that. It's been Nvidia, it's been Broadcom, and others. And there are some changes there. If you'd like to get into that, I can. But I foresee growth in AI semis for several years into the future. But the nature of that growth may change. On the cyclical component, I do think we are bottoming in terms of analog, automotive, other areas of cyclical semis. Do you like me to elaborate on the AI stuff?
I'm just wondering if you think that you said the growth will change. I'm just wondering if you could expand on that. Do you mean the growth will be there, but it will slow down?
Well, just law of large numbers, the growth will slow down, but it'll still be growing. But the difference is we are shifting from a purely GPU demand-led environment to something where there'll be still obviously GPUs will be a huge part of that. But we are going to see a big ramp in ASICs as well from various hyperscalers. For example, Google was the first with their TPU. Many people don't realize it, but internally, for most AI workloads internally at Google, they run it on their own chips, which is called the TPU. Now, that provides them with several benefits, like it provides them with a lower cost of inference, lower cost of training, and we could see that being replicated by others, as others are just behind. So Microsoft, OpenAI, Meta uses it for non-core workloads, like ad targeting, for instance, currently. But you can see that expanding, and Amazon as well. You can see that expanding to more core workloads, mostly inference. Training is still dominated by Nvidia, but so as this happens, you will get multiple custom chip designs being manufactured by TSMC, and that's what I mean by the changing landscape for foundries.
Got it. Okay, I want to get to space as well, because that's a sector that is changing so dramatically. It's so much easier for businesses to get something up in space if they want to do experiments. Where do you see more growth on that side of things? Well, the thesis around space is very simple, and it's far-reaching, and it's very durable. So the simple thesis around space is about launch costs. So in the 1980s, if you wanted to get a kilogram of payload into orbit, you would put that on the space shuttle. Now, more than likely would have cost you $50,000 to send that kilogram into space, into orbit. Well, in the 2000s, you'd probably use a Delta rocket. That got you down to like $12,000 per kilogram. So quite a reduction in costs. And then SpaceX came along and changed everything with their reusability. Now, it wasn't a fully reusable rocket. The Falcon 9, you can reuse the booster, but not the
the upper stage. And that rocket brought down costs to several $1,000s a kilogram. With the next generation of rockets, whether it's from Rocket Lab or Starship from SpaceX, the forecast is that for that payload cost to come down to hundreds of dollars. So we've gone from $50,000 to hundreds of dollars per kilogram. The implications of that is profound. You should see an explosion of commercial activity in space as a result.
Okay,
and that's
talk to me, break that down a little bit, because obviously the companies providing the ride to space are going to make some money, but what other businesses do you see benefiting from this cheaper ride to space?
Well, ironically, the companies providing the ride to space will probably eventually become the smallest part of that market, because while they're enabling it, you're going to see all kinds of things happening in space. I mean, for example, there's a company out there that wants to manufacture pharmaceuticals in space because of the zero gravity environment. There'll be others that want to have a moon base for whatever reason to extract the minerals from the moon, for instance. Long term, like say 15 years out, you may even see companies doing asteroid mining, which, asteroids are very rich in precious metals. And if you could do that economically, it would be a huge boon to the industry. So it's really enabling, just like Moore's Law enabled an explosion of compute, an explosion of software applications. Lower launch costs are going to just create an explosion of commercial activity in space.
Got it. Okay, Reza, we are taking another quick break to line up some more phone calls. So we'll be back here on Market Call in a moment. Stay tuned. Welcome back to Market Call. Thanks for joining us. We have Reza Samahin. I keep getting that correct, and I will get it by the end of the show, trust me.
Okay.
But let's get right to a question here that has been emailed in from Donna. She says, I've been thinking of buying shares of Nvidia, but I worry I left it too late. Is the time for getting into it past? It's a valid question, right? Nvidia shot up and now it's drawn back at the start of the year. So people are thinking, should they dip in? But we are seeing it sort of waffle the past few days, meaning it's not really climbing back up the way we thought it might. So what's your forward take on Nvidia?
Well, it's a $3 trillion company now. So you're not going to get the same returns you did the last few years. It's just, mathematically probably impossible. Having said that, fundamentals are sound. They're sold out for this year. There's no question they're sold out. The issue then is what happens next year, what happens to the AI market. And like we talked about earlier in the show, there is this threat with ASICs, which is custom chips. So that has to be looked at, not this year, but next year, the year after that. So NVIDIA, I think it's fine. It's just there's other ways of playing the AI trend as well, which you should be aware of. So let me put it that way. You should diversify. You should have a basket within AI. And also, like any technological progress, the early winners are typically the infrastructure names like NVIDIA. But as you go on multiple years from that point, you're going to see other winners that build on top of what the infrastructure provides.
So if you were trying to diversify in the AI field, can you give me an idea of the kind of mix you would have?
Sure. I mean, there are other large players like Broadcom, for instance, a clear leader in networking. They do provide the TPU chips for Google currently, and they have other partners for new ASICs. So they're a clear leader. And you can also look at memory. I think you may be aware that there's this new test time compute paradigm for inference. What that does is it increases memory usage by quite a bit. You may have heard the term HBM. I don't want to get too technical, but there are, this should be a huge growth driver in memory, the DRAM, which helps companies like Micron and Hynix, for instance.
Got it. And we know Micron, I think, is reporting earnings today, later on after close. So let's go back to the phones. We have Ace on the line. He's calling from Toronto. Hi, what's your question today?
Hi, good afternoon to both of you. I'm a big fan of the show. Just question for Reza. What does he think about Tesla? It's been downward, like probably 40%, and maybe because it's related to Musk being a part of the Doji and also the tariffs. So I don't know what you think about Tesla and what's a good price to buy it, or should I just wait for more for further fallback? That's it. Thank you.
Thank you. Tesla has been hit pretty hard by a number of different things, announcing a recall, by the way, today on its trucks in the U.S. For a problem there. Reza, what's your outlook for Tesla?
Well, highly controversial name, first of all. Yes, it has had a big hit recently, but it's had a big run late last year. So it's just back to where it was the beginning of 2024, essentially. It's a highly polarizing name. If you look at it as an automotive company, obviously it's overvalued. And there's been huge brand destruction by Elon Musk, massive brand destruction globally. So that's a very big negative. However, if you're buying it because of robotaxi and robots and all that stuff that they're promising to deliver, maybe one day, well, then it deserves a different type of valuation. Essentially, it's a call option on that future. And how confident are you? Now, you have every right to be skeptical. They haven't delivered. They've been promising robotaxi since 2016, I think. And we're 9 years later, they haven't delivered on it. However, the technology's changed. The underlying architecture is much different today. They have a shot at getting there. And if you believe Musk, he's saying in the next few months, there should be some demonstrations in maybe the Austin area. So maybe you wait for that. Maybe you wait to see if there's anything that comes out of this company. Because right now, they haven't met their promises. They missed them by 9 years. So why should you believe them?
Do you see the stock sliding even more as a result of Elon Musk sort of leaving the front of that company and going to Washington?
Well, if they don't deliver on robotaxi, yes, the stock will go lower.
Got it.
If they do deliver on it, though, people will re-rate the stock again. And that's why I'm saying wait till that happens. I mean, there's only a few more months left, right? If they do deliver on that promise, then you should consider buying the stock, for the long term.
Got it. Okay, let's go back to the phone lines. John's on the line, calling from Scarborough. John, what's your question today?
Yes, good afternoon, Reza. I would like to know your long-term view on an Intel Corporation, considering the past days' volatility and rumors. Thank you very much.
All right, let's have a look at where Intel is right now. But it is down to about $23.93, so just short of $24. It took a deep dive last summer. What was happening then?
I mean, unfortunately, it's been a long road, where the stock has gone nowhere for over a decade or longer. And we know the reasons. The reasons are they've lost their leadership, both on the manufacturing side as well as on the design side. And so what happens now? Well, with the new administration and also with the past administration, you really see a push to bring manufacturing leadership back to the U.S. And I think for that reason alone, Intel looks interesting. Now, if you add the fact that they just changed the CEO, they appointed a very technically capable CEO, I'm very encouraged by that. Now, nothing's going to happen immediately. They will show progress on their latest manufacturing node, which is 18A, in the next few months to a year, which is all good. The problem is to get a commercial customer outside of Intel on there requires more than showing leadership in the process technology. It requires libraries. It requires tools like design tools. It requires a lot of ecosystem retooling, or not retooling, but compatibility, which is an uphill battle. But I do believe that the new CEO is up to the task, and I think the U.S. government's behind this company, so I think they will deliver. So I think it's a good time to be looking at it.
Got it. Okay, Reza, we're going to take a quick break. We'll be back with more of your phone calls in just a moment. Welcome back. Thanks for joining us here on Market Call. Reza Samahin joins us to take your questions, and Frank is on the line from Mississauga, Ontario. Hi, Frank. What's your question?
Hi. Thanks for taking my call, and thanks. Welcome to the channel, Reza. My question is, if you can compare AMD with the rest of the semiconductor players out there, especially Nvidia, what is the knock against AMD? They seems to be growing, albeit not at the same rate, but they are growing. And I also, with Windows 11 mandate to change the computers, and the old computers are not going to work, are they going to get the part of the pie in that space as well, along with Intel? And especially AMDs, are they big on the do they have a space market share in the AI, especially the inference side? And is it worth keeping an eye on? Thank you.
Reza, go ahead.
Well, AMD actually makes great chips, great semiconductors. The issue with AMD is not, ironically, it's not hardware, it's software. They haven't been able, for whatever reason, to deliver on proper drivers and a proper software ecosystem to run AI workloads effectively or reliably. And as a result, they've not gained much share, if at all. Nvidia just dominates the GPU market for AI. I mean, AMD is not even close. They have had success with the hyperscalers, but it's not clear if they have had success with the customers. So the hyperscalers desperately want an alternative to Nvidia when it comes to GPUs, and AMD does provide that alternative. But it's unclear what the utilization rate is of AMD GPUs within these hyperscalers. And it mostly comes down to the software ecosystem. Now, there are really large customers that could create their own software to run AMD effectively. So, for example, maybe it's OpenAI. They have this thing called Triton, and there's other vendors that could easily write their own software. But those are the really large customers. When it comes to the average customer, they are struggling running AI workloads on their GPUs. Now, it's different with their CPUs. They're actually quite popular. They have benefited from Intel's missteps, and they've taken considerable share in data center, and that's helped AMD over the years. If they can get their act together on the software side, I would be much more bullish.
Okay, we do want to get to another caller in this quarter, so let's go to Taravar. He's calling us, I think, from Arizona. Taravar, what's your question today?
Yes, thank you. My question is on Texas Instruments. I believe they're the analog chip producer, and not the super end Nvidia type company, but they are really focused on free cash flow. Matter of fact, it's on their website, on the investor page. And secondly, they tend to have very good production where they can guarantee supplies, so they usually charge more. Can you talk about going forward? I've got this on a long-term hold. What do you think of Texas Instruments? Thank you.
I haven't talked about Texas Instruments. I haven't even heard the name in a long time. Reza, what's your take on Texas Instruments?
They're a well-run company. I mean, they're certainly a different company than they were 30 years ago. Like, they're extremely well-run. They are integrated, like the caller mentioned, that they have their own manufacturing capability for analog, so they're not reliant on others to make their chips. Although they do rely on others when there's a capacity, when they're capacity constrained, they'll rely on others to make their analog chips. So from that perspective, and they do focus on free cash flow being a metric that they focus on. From that perspective, it all makes sense. They've done well. Having said that, there are certain geographies and markets where they'll more than likely lose share, China being one of them at the low end. China increasingly is focused on indigenous production of all chips, including analog. So at the low end, they will be replaced. But it's not just specific that Texas Instruments is replaced. It's true for all analog vendors that they will be replaced over time. So that would be the concern. But they are a well-run company, and they're highly integrated. So if there's a shortage, they are well positioned to supply into that market.
Got it. Okay, we do have to take a quick break. That's the end of our phone calls at this point. However, Reza will share his top picks. That's coming up next. Thanks for joining us again on Market Call. Reza Samahin is our guest. He's a first-time guest, and he's sharing top picks at this point. Let's move to his first one, which is Rocket Lab, RKLB, on the NASDAQ. This is, you said, a space launch and satellite services company. What do you like about them?
Well, we touched on the thesis around space. Launch costs come down. We should see an explosion in commercial activity. And Rocket Lab is well positioned for this. They have two businesses. One is the launch business, and they're going to launch a new product, a new rocket, later this year called Neutron. which should put them in direct competition with the mid-range rocket from SpaceX called Falcon 9. So I'm excited about that. And then 2/3 of their business is actually something called space systems, which is building satellites, helping customers. We talked about pharmaceutical manufacturing, for instance. Well, Rocket Labs provides a turnkey platform to their partner in pharmaceutical manufacturing. So as a business needs access to space and the ability to do things in space, they turn to Rocket Labs. And I really like the CEO as well. He's scrappy. He's done a lot with very little capital. He's technical. He reminds me a lot of Elon Musk in the early days.
I didn't realize there's that much capacity for businesses who want to get into space to do different things. So you mentioned pharmaceuticals, you mentioned sort of mining, even asteroids or on the moon, that kind of thing. What else can you tell us about this opportunities in space? Who else is going to benefit from that?
Well, the other thing is remote sensing of the Earth. It's communications, about Starlink, but there's alternatives to Starlink. So really, it's all about bringing the cost down. It's elasticity of demand. We've seen this with other technologies, whether it's semiconductors or other things, internet. As the costs come down, there's an explosion in demand, and that's what we're counting on here.
Got it. Okay, let's get to your next pick, which is Impinj, PI on the NASDAQ. They are basically sort of a tagging company. Tell me more about what they do.
So there's a technology called RAIN RFID, and essentially what that allows you to do is tag any item for pennies, basically. The IC is a penny, 2 pennies, something like that. So you can tag things like apparel, like Walmart does this. So any piece of clothing you buy at Walmart will have an Impinj tag on it or equivalent. They're also doing it with general merchandise. If you buy a toy, it may have an Impinj tag on it. And they're getting into food. So what this allows you to do, if you're a Walmart, is to quickly do inventory tracking, for instance, very cheaply. You can remotely inventory an entire shelf or a cabinet without actually having to hand count the items. You can use it for returns, like when someone brings back a piece of merchandise, you can enable the tracking again. You can use it for loss prevention and also authentication, which is very important. Say you have a high-priced item like a handbag or something with a brand name, like a luxury handbag. You want to make sure that's truly a authentic item, and that you can use this technology for that as well.
How competitive is the space? You have AirTags, I guess, right now, but how competitive is the space?
So AirTags is a different segment of the market. They're a much bigger product. They're much more expensive. This is a little IC that you can't barely see with your eye, and it's pennies. The cost of the IC is just 1 or 2 cents. So it's a completely different market. And really, within this segment, you have 2 main competitors. One is Impinj, and the other one is a company called NXP. Now, Impinj's technology is superior, and not only that, NXP, there was a lawsuit between, IP lawsuit between NXP and Impinj, and Impinj won that, and NXP has to pay them licensing fees as a result. So there's no question that Impinj is the clear leader in this space. There will be some Chinese competition as well, but I don't see that as a big deal in North America or Europe.
All right, let's move to your third pick then, which is Neat, which is a Canadian small cap. Tell me about Neat.
Well, Neat is a very interesting company. It's rare to find a high quality company with good management in Canada that's a small cap. And Neat fits that bill. It's a high growth company. It grew ARR last quarter by 60%, which is very impressive. Its valuation, while may seem high by Canadian standards, really it isn't when you compare it to US peers that are growing at the same rate, about 7 times ARR, 8 times ARR. And it's targeting regulated industries where you need a validation solution. And they started out with the pharmaceutical industry. So of the top 10 pharmaceutical companies, like you can name them, they're household names, Neat has the majority of those as customers, which is highly impressive for a small cap company. They've delivered on what they said they would deliver over the years. The stock has responded, but I think there's still quite a bit to go. And the other thing is they're selling really both to new customers as well as their current install base, and that's a very good sign. If you look at the SaaS metrics like net dollar retention, it's about 150%. Now that's very important because that tells you for existing cohorts, they're increasing spend for Neat solutions by about 50% a year, which is quite impressive. So we really like the metrics, we like management, we like the market, we like the customer base, and we think it has a great runway ahead of it.
All right, Reza Samahin, I have to leave the conversation with you there. Thanks for joining us today. I think you did pretty well for your first time, so appreciate that. And as we head out here on Market Call, a quick look at the markets and how we are doing in North America so far. The TSX, not much movement today. It's dropped about 15 points, but had a pretty big comeback yesterday. The S&P 500, also not a lot of movement there. It is down today by almost 11 points. And the NASDAQ down 58 points at this point, 58 and a half almost. That's where we sit at this hour. And thanks again for joining us on Market Call. We'll see you again tomorrow.